there's something happening quietly behind the scenes. Something most people will only hear about when it's already too late. And it's this. Millionaires, yes, the people who have the best advisors, the fastest information, and the strongest financial instincts are pulling their money out of traditional banks right now. Not next year, not someday, now. And the question is, why? What do they know that the average person doesn't? What are they preparing for? And more importantly, should you be worried? Let's break this down clearly, calmly, and with zero panic, because once you understand what's really going on, you'll see the logic behind every move. Millionaires don't think about money the way most people do, while the average person keeps everything in a savings account, a checking account, or some certificate of deposit. Wealthy people treat a bank like a tool, not a vault. And right now that tool is becoming more and more dangerous to rely on. You can see the signs everywhere. Record high bank withdrawals in private wealth data, massive shifts into alternative assets, big movements toward private credit, and the rise of decentralized banking tools. Wealthy people are repositioning fast. The first reason millionaires are pulling money out of banks is something called concentration risk. Most people don't even know this exists. In the US, the FDIC only insures $250,000 per depositor, per bank. That means if you have $1 million sitting in one account, $750,000 of it is uninsured. And most people think, well, the government would step in if something happened. But millionaires don't think like that. They don't trust luck. They don't trust should be fine. They trust systems, data, and probabilities. And the probability of bank failures has been rising year after year, especially with commercial real estate defaults, regional bank collapses, and liquidity pressures. When Silicon Valley Bank collapsed in 2023, millions of dollars evaporated in hours, and every wealthy person paid attention for them. That was the wake-up call. It proved that banks can and will fail faster than anyone expects. So what did millionaires learn from that moment? Simple. Never leave large amounts of cash sitting anywhere without a backup plan. They started spreading money across multiple banks, especially smaller community banks, digital banks, and even credit unions. Not because they're paranoid, but because they're smart. The second reason millionaires are pulling their money out of banks is inflation erosion. At first glance, it seems harmless. Inflation goes up a little, prices rise a little, life goes on. But for someone with millions, inflation is like a slow financial cancer. If inflation is even 4%, that means a millionaire loses $40,000 in purchasing power every single year just by holding cash. 10 million. That's $400,000 of silent loss. Even worse, most savings accounts don't pay enough interest to outpace inflation. So wealthy people ask a simple question. Why would I keep money parked in an account that is slowly dying? And their answer, they don't. They move it. Where do they move it? Into assets that grow faster than inflation. Real estate, private equity, private credit, index funds, bonds, T-bills, farmland, even alternative stores of value like gold or digital assets. Anything is better than watching their money evaporate. The third reason millionaires are exiting banks is lack of control. This is something most people never think about. When you put your money into a bank, technically it's not your money anymore. Legally it becomes the bank's liability and they get to decide what to do with it. They loan it out, they invest it, they take risks with it. And in return they give you tiny amounts of interest. But millionaires don't like the idea of not controlling their capital. They want liquidity. They want flexibility. They want to decide where their money sits, not the bank. And with new banking regulations tightening and lending standards rising, the wealthy are predicting something most people haven't even noticed yet. The era of easy access to your money is fading. The idea that you can always walk into a bank and withdraw whatever you want, that's becoming less reliable. Daily withdrawal limits, delays on large transfers, suspicious activity freezes, these things are becoming more common. Wealthy people see the writing on the wall. If they wait, the system will control them. If they act now, they control the system. The fourth reason millionaires are pulling cash out is the rise of private banking alternatives. You've probably heard the term family office, but you might not know what it really means. A family office is basically a private bank for wealthy families. They manage their money, invest it, protect it, and grow it with far better tools than any retail bank can offer. And right now, family offices are exploding in popularity. Why? Because they give wealthy people more privacy, more control, better returns, and lower risk. Think of it like this. Why store millions in a checking account earning 0.3% interest, when you can move that same money into a private treasury fund earning 5.2%, or a private credit portfolio earning 8 to 12%, or a short-term treasury ladder with almost zero risk? That's the logic wealthy people follow. And that's why they're exiting banks. There are simply better options everywhere you look. Another reason millionaires are moving their money is the fear of a credit crunch. When banks are stressed, they stop lending. When banks stop lending, businesses collapse. And when businesses collapse, so do jobs, investments, and entire sectors of the economy. Wealthy people know this cycle well. They've seen it happen in 2008, 2001, 1990, and even earlier. When you understand economic cycles, you can see the pattern repeating. And right now, in 2026, the US is in a tightening phase. Lending is slowing, defaults are rising, commercial property is in trouble, and wealthy people know that when liquidity dries up, cash becomes king, but only if that cash is safe and accessible. And finally, the biggest reason millionaires are pulling out of banks is simple. They want to be early, not late. Wealthy people don't wait for the news to tell them something is happening. They move first. They protect themselves first. They prepare first. The average person reacts. Millionaires anticipate. They see signals. They study markets. They talk to advisors. They understand the game. And right now the signals are flashing yellow, not red, not panic, but caution. Caution enough to reposition their assets, reduce exposure, diversify accounts, and rethink where their money sits. So what does this mean for you? It doesn't mean you should fear your bank account. It doesn't mean you should withdraw everything. What it means is this: doing what wealthy people do always starts with thinking how wealthy people think. Create backups, split your savings across multiple accounts. Don't hold more cash than necessary. Invest consistently. Put your money in assets that grow faster than inflation. Build a financial system that protects you, not one that traps you. Because at the end of the day, millionaires aren't pulling money out because they're scared. They're pulling money out because they're smart. They're reallocating. They're strengthening their position. They're preparing for the future, not reacting to it. And the truth is, anyone can do the same if they stop treating banks like vaults and start treating them like tools. Money doesn't stay safe by sitting still. It stays safe by moving intelligently. And that's exactly what millionaires are doing right now.